What is going on, everybody, on this Saturday afternoon? It is Selection Sunday tonight. Really excited. St. John's did pretty well. It's going to be exciting to see what type of seed they get. Maddie, how are you today?
Steve, every day I wonder, what would Steven do?
You know, I wonder that also, as I have no freaking clue. And thank you, everybody, for being here. We truly appreciate it. Look at this. Chels is here, PB's here, Rusty's here. A lot of people here.
You're a good man, Steve.
Lisa's here. June is here. Love it. Love it.
I don't know why they're all on your channel, Steve. I just don't get it. I mean, they have to endure midstream advertisements.
I don't know. You could come in my channel also, Matt.
I try, but you don't pay me enough. So,
well, before we go any further, read the disclaimer, please. We are not financial advisors. We have no idea what we're talking about. We don't know your situation. Please always do your due diligence. Don't take anything we say too seriously, and don't make any decisions based on what two guys on the internet say. So please pause, read the disclaimer, do your own due diligence. And with that being said, Matt, before we get into everything, we do have new news. And this is, I don't like being political. I'm not going to be political, but I am going to read this. And this is from not too long ago, from President Trump. Moments ago, at my direction, the United States Central Command executed one of the most powerful bombing raids in the history of the Middle East and totally obliterated every military target in Iran's crown jewel, Kharg Island. Our weapons are the most powerful and sophisticated, blah, 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 blah. There's nothing they can do. Iran will never have a nuclear weapon, nor will it have the ability to threaten the United States of America, the Middle East, or for that matter, the world. There was something in here. There we go. I have chosen not to wipe out the oil infrastructure of the island. However, should Iran or anyone else do anything to interfere with the free and safe passage of ships through the Strait of Hormuz, I will immediately reconsider this decision. It's going to be interesting to see what the hell happens with the oil markets overnight and tomorrow. And
I thought that was released like yesterday or Friday, Steve.
I'm just seeing it now.
Oh. So when you asked me about new Trump tweet, I was like, what are you talking about?
Yeah, no, I'm just seeing this now. Maybe it was.
I don't know. Maybe you're right. Maybe it's a very similar tweet than what the other day was, but
no. I don't know. Where do you, before we get into the small portfolio challenge, where do you think we go with oil right now? And where do you think the oil markets end up this week?
I mean, if I knew, I wouldn't be doing a YouTube video talking about it. But the thought that I kind of have is, hopefully that we're on the second half of this thing and we're coming to a close. And if that's the case, I still think that there's a lot of oil out there. Yes, there's supply chain disruptions, but I don't think that there's been massive disruptions to the total producibility of the capacity that we have across the globe. And so my anticipation is that we would likely within a month or two go back to normal, maybe mid to high $60 oil. But that's all dependent upon this wrapping up. If it doesn't wrap up and oil infrastructure gets impacted, then obviously there will likely be a longer staying, more persistent, higher oil price. What price that would be, I guess it really just depends on how much infrastructure gets impacted and capacity gets impacted. But right now, it's not like we are really struggling on the supply versus demand chain. So,
well, hopefully this all comes to an end. Oil at 98 a barrel, no bueno. We need this down to 65 sooner than later. We got the Fed this week. A little worried about what their commentary is going to be and what they say coming out of the meeting. Obviously, the chances of a rate cut are so slim right now, it's almost non-existent. Mitch, what You're in North Carolina, you pay $3.80. Wow. Gas is going up. Gas is going up.
Yeah, I think with respect to the Fed, it'll be interesting to see the dance that they do, because in previous discussions, when data starts to trend in the right direction, it looks really good. They always try to play calm about, oh, well, we don't necessarily take into direct direct information from the month that is current. We take it from the month that is previous, and they have trailing data, and that's always been part of the problem. Is they're always acting on 2 to 3 month trailing data, and they're waiting for a trend to show up in the tail months. And so I think it's going to be interesting to see the commentary from Jerome about, does he say, oh, we have to wait until March comes in before we take a lot of this into account, recognizing that really it was only 1 or 2 days within February where this higher oil price piece was going on. So the majority of February should be unimpacted or very little impacted by the current ongoing energy environment. So very curious as we roll into March and we start to have the May discussions, because I don't believe there's one in April, but I think there's an FOMC in May.
May and June.
Curious, May and June, yeah. So if they really come back and they say we'll have to wait until the May to really see how that is impacting the overall CPI and PPI of the ongoing consumer, then yeah, I'm kind of curious how, because then if they're like, oh yeah, we took into consideration oil prices this month and the impacts it's going to have, etc., then they're playing games, because in the same breath last year or 2 years ago, when things were going in the right direction, they would be like, no, we have to wait. So I'm very curious to see if they have the same sort of verbiage around that. Now, of course, they always talk about the current events and everything like that during the actual speech itself. So anyway.
Yeah, we'll see. Look, we'll see what happens. I think they're going to be very hawkish. I think the markets are going to be very choppy this week. We'll see what happens. We really need a turn in the tide over in the Middle East right now. So, with that being said, did you do your homework, Matt?
I did, Steve.
Let's see it. Bring it up.
You bring it up.
Fine.
Making you work.
I shall bring it up. Now, is the homework correct?
I think so.
Okay. All right. All right. I froze a little bit.
Steven. He's behind in the challenge.
I am. All right, what are we looking at, Matt?
You want me to do it first? Okay. Not much has really changed in the portfolio. It's mostly just a continuation of where we were last week. So I still have the 100 shares of SoFi, which are continuing to be down, but that's partly offset by the profits that I took in the Palantir 2X. I don't have any naked options on right now, so that's just kind of a placeholder until. But obviously, I'm down $629 on all my long options that I've ever wrote.
So what did you update here? Like what did
there's nothing there's nothing to update other than just the current value on the cash secured puts and the shares of SoFi. So next decade, that got updated. It continues to move in the right direction. So slowly capturing profit there. Serve, I think it got a little bit better or worse. I don't remember, but it was about the same last week. And then Symbiotic, I believe that I don't know if we had Symbiotic last week. I wrote it on the 10th, so I guess not. But so Symbiotic is a new position, but I'm currently slightly underwater on that one. So hopefully over time it'll continue to go through theta decay, and I'll be able to capture.
That's so you just wrote it.
Yeah, I wrote this on the 10th. Sorry. When I wrote it, I made sure to add it. So I thought when I entered it this morning, I thought that it was there since last week, but you're right. It was on Tuesday that I wrote that.
All right, hold on.
So I captured the 569 in premium from that. And then obviously that gets offset by the fact that it's underwater by like 40, 50 bucks because it's currently valued at negative 600.
So
that doesn't work. That doesn't work, Steve.
Yes, it
that thing doesn't.
does.
No, it
You
doesn't.
got to do the formulas. So where's your total?
My total is, I fixed it all the way up top. So I made it very simple, right? So my premiums generated is the 2,700 or whatever minus whatever the current value is of the liquidated. And then my long options value is how much I've purchased them for. So the 900 some minus what I currently have, which is what I ended with, which is 300 something. So that's the difference. So I'm down 629 on total on those. And then the equity value, which is present there.
Okay, so you're at 14.2%.
Yep.
Okay. Okay.
And that equity value is basically just the value of profit minus losses right there. So,
all right, sounds good. Well, Matt is ahead in the challenge so far,
but down from last week.
but down from last week.
Yep.
I am, where am I? I am still negative. I am negative less than I was last week. I'm down 8.98%. I wrote new cover calls on BMNR that I got stuck with because I was working and this shit got put on me without me paying attention. And Zeta, I rolled and I rolled it out to the 20th. So I'm just rolling it every week until it goes above 2050. So that cash will just keep getting rolled out. Didn't make any other investments. BMNR was up a little this week, so that helped a little bit. I think I was down 12%. I'm basically down 9% now. So about another month, I think I'll be back to positive. And that the moral of the story is don't mess with options unless you have the time to manage them. I was sitting in meetings, not paying attention on a Wednesday, and BMNR got put on me. And got
midweek?
Put on me a lot. So
midweek,
I'm working my way out of the hole. What?
It happened midweek?
Midweek. Which is not normal, but with how much BMNR went down, is I think I had them written the cash secure puts at 28, and it got put on me for I think 2050 or
What was your thought around that? Just to walk through that, was that you just anticipated that BMNR was going to have a run up and you'd be able to close it out, or?
Well, in the beginning of the challenge, I was doing well writing the cash secure puts on BMNR when I was around 30, and I was writing them at 28. And then midweek, it just got put on me when it fell that tremendous amount. You're right.
I don't know. My contact is bothering the crap out of me.
All right, go fix it.
I'm still here. I'm just gonna change it.
So, yeah, moral of the story: don't sell cash secure puts if you're not going to constantly pay attention. So I will be working my way out of that hole. I am certainly not worried about it, and this will be right sized in a couple of weeks, I believe.
You should be worried about it, Steve, because I don't know how to put this lightly. You're losing.
It's March.
I know. We still have a lot of time left.
It is March.
Name is Steven.
Oh, some people say they're getting some SoFi assigned to them on Friday. I don't know about SoFi anymore, guys. I have love-hate relationship like I've always had with SoFi. And right now the macro is just not setting up for them. A lot of people are worried about private credit. I don't think private credit is necessarily a huge problem for SoFi right now. I think more the rate cuts are going to be a problem if we don't get them. I also think that SoFi is in a situation where they have a very big problem with messaging, and they're not being looked at the way that a lot of people like them to be looked at. They keep defying metrics, they keep giving triple beats, and the market just continues to disrespect them. Noto is trying to backstop it by buying, which is great, but I don't think it's something the market's going to get excited about.
Do you
So
think it's just because people have yet to really see the fintech aspect of um the stock, and so that in that respect they just value it like a bank, in which
I don't think people care about fintechs anymore. I don't think people care about asset light banks. When
do
I
you think
say
it's
asset
because they
light,
got
I mean not having branches.
do you think it's because they got burned on things like PayPal and
Yeah, I just don't think that people care about the whole fintech narrative. I mean, you have PayPal, you have Block, those have been absolutely destroyers of shareholder value. Have there really been any great fintechs that have just been, oh my God? I mean, I think that whole narrative is not as exciting as it once was. And SoFi really is a bank. There's you're right.
I don't know what's going on with my eye, man. I've been like trying to flush it all morning. Um, I think I have like a scratch. I don't know if I scratched my eye in the middle of the night. I don't know what it is.
Oh shit.
I switched the contact and it's still
See,
I don't know what it
I
is.
will never wear contacts ever in my life. You can pay me to put something in my eye. Fuck that.
Yeah.
Glasses for me. Anyway, so I don't know what to do with SoFi. I think it's a great company. I think that Noto has done an amazing job. I think management's done an amazing job. All the metrics are great, but the market is looking at it as a financial institution. And that's fine, but they need, if they are going to be pigeonholed as a financial institution, they need to truly be one, and they need business banking. They need wealth management. They need custodian of 401k plans. They need all those things. They can't half ass it. They can't live and die with a loan book and just consumer financial services.
I'm I thought I'm with you 100% on that. I thought that SoFi would dive a little bit deeper, both feet in the pool with the ETF piece and their trading platform, just seeing how well other people have done with it. And to be honest, it's been pretty lackluster. Um, I'm not saying that SoFi is not making money. I'm not saying they're not growing. I just am a little bit surprised. So maybe I don't have the data. Maybe I'm just not as in tune with it. But it just seems like the products that I want to see out of SoFi, I thought that they were pretty revolutionary when they first started getting after it, which was like the weekly payment ETFs and other stuff like that. And it seems like it's just kind of faltered, and maybe with additional social media push. I think the thing that SoFi has done a little bit better recently is obviously the interviews with Tanner Tevis, and at the same time I think you'll have an opportunity to, but I think having a little bit more of that like hipness, I still feel like it's just being run like a large institution, which is great, but I don't think you'll get the multiple that people are expecting off of that. So I don't know. I think that's partly the problem. When you look at it, it's like you're hoping that it's going to be valued 25 to 50% more based off of the current metrics, because you want it to be a little bit more of a hip bank, but it's a bank at the end of the day,
Right?
and so it's tough. So unless you actually demonstrate that you have that hipness, it's just going to be a leader of a more traditional pack. So
Here's the data. And look, I'm not cherry picking anything. I used 18 banks from the large money centers down to the regionals. Nobody can say I am cherry picking information here. 18 of them. When you look at price to tangible book value, SoFi is tied with JP Morgan for the largest multiple. There are only 4 banks that trade over 2 times tangible book. Okay. Should SoFi be trading at the same multiple as JP Morgan? I don't know, but they're certainly, when you look at the financial institution landscape, getting a good multiple. When you look at price to earnings, is everybody wants to talk about growth. Well, SoFi's multiple on earnings is more than double everybody else's. So
But
if they're
yes
a
and
financial
no.
institution, they're getting a good multiple.
Yes and no, though, Steve.
Okay, because they're not growing like a bank, but they just became a bank.
No,
So I don't
they
know if
just
that
got to
narrative really
profit.
works.
They just got to profitability. So at the same time, it's going to be artificially inflated because they haven't been profitable like these other key banks for the longest time, right? Like JP Morgan, how long have they been in business versus SoFi? I'm not saying, but I'm just saying I think I'm not saying that it needs to be valued at 2x or 3x, but I think if you're looking at a price to earnings, it might show that it's inflated because of the share-based compensation is likely higher at something like a SoFi versus a JP Morgan. So is there a better metric to potentially use? And I don't want you to have to update your entire spreadsheet.
No, I can. It's just financial institutions trade on tangible book value and earnings. Those are the two main metrics that they trade on. So when you look at earnings, they're trading at a much bigger multiple and they're getting a bid based on the two traditional metrics that banks trade on. And I get it. SoFi's growth is more, but they're being compensated for that with a 30 times earnings. So I don't believe that
But
they should
at the
be.
same time, though, like these other banks haven't just hit profitability. That's what I'm trying to iterate.
What does that matter?
Because earnings are going to be artificially pushed down because of share-based compensation, right? So the other banks are more established. They might not necessarily have as much share-based compensation. So I'm assuming if you looked at it from a price to EBITDA or something like that, it's likely to show up more favorable.
We can do that.
I mean, you don't have to do it right now, but I'm just saying, like, I wouldn't, you know what I mean? Like, that's like me saying Rocket Lab is going to be valued like differently than other industrial companies. It's like, well, Caterpillar's been around for 100 years. Rocket Lab is still in its infancy, trying to grow. Like, you can't do an apples to oranges comparison.
Yeah, they're not even in the same sector. Like the whole reason you go on earnings and tangible book for banks, and if I was comparing them to Hood, great. But as a financial institution, which they technically are and how they're being valued, these are the two metrics that are most used to value them. How much EBITDA have they done? Why is this not showing it? I'm gonna have to go to their 10K. So Seeking Alpha doesn't have their freaking EBITDA for some reason.
Still 10% shorted, believe it or not.
I do believe it.
Against peers.
Which doesn't make sense because it's a profitable bank. Like, why would you short a profitable bank? Would you be picking up more SoFi, Matt?
I would be if I had more auxiliary cash and wanted to pick up more.
I wonder why I can't find their EBITDA anywhere. I know they report adjusted, but I don't care about adjusted. I want straight EBITDA.
I need to probably put EBITDA in here. Thought I had it in here.
They're not on Yahoo Finance or Seeking Alpha for EBITDA. Very annoying.
But it's been 8 quarters of profitability, right? I mean, it's not like it's been established for 5-6 years.
Yeah, 8 or 9 quarters. Yeah. So adjusted EBITDA, which I fucking hate these adjusted numbers, but 1.05 billion. So they're getting a huge multiple on that. huge.
22x. Okay. Yeah. But they're also growing at 40% for revenue. I don't know about EBITDA growth, but
EBITDA growth was 29% in 25, and they're saying that they're going to scale to 34% growth to 1.6 billion in 26.
when dividends, Steve?
I'm sorry. I'm looking at margin. They're going to grow at 52% rate on adjusted EBITDA.
So at $17.76, you're not a buyer
No.
because you already have so much, or because
I have a very large position in it, and I don't think that this is good value here.
what would be good value?
12
So
for me.
you,
I own a lot of it, so
but I guess my question is, I know you're not really a trader either, but if that was the case and it ran to 30 something, why not? Why wouldn't you sold? Because you think it's going to go to 100 at some point, or
I don't know that it's getting to 30 this year anymore.
was it like a lap? I'm not trying to be an ass. Like, I'm just asking. Like, I'm just kind of confused. It's like, is that like a lapse of judgment? You just got away from you hype, like, because I feel like we were looking at 35, and everyone was like, "Oh, it could go higher. It could go higher." Here we are sitting at 50% of that.
I think it's topped out. I think there's a very good chance it's topped out for the year.
I'm just confused then why you didn't sell
Yeah,
at 30.
I didn't want the tax burden. One,
Yeah.
two, I listen, I thought that it was going to be short term. Now with everything with oil, the macro changed over the last 2 weeks, which
Okay.
has changed a lot of things in my investment thesis for SoFi, because I don't think we're getting 3 rate cuts anymore this year unless something changes in the next 2 weeks. And I do think there's a likelihood that we get increased inflation. And now when you start looking at Meta laying off 20% of jobs, Morgan Stanley laying people off, we could hit a very tough labor market where the amount of people that they lend to shrinks. One, two, we could end up in a scenario where we go into a recession. And that would not be good for them. There's a lot of things that are going against them right now.
So you think the analysts have a price target of $26. You think that that's fugazi?
I think it's reasonable. I just don't think 35 is anymore.
So you think 26 is okay?
I think it's
Because we're getting some like mid-February, so nobody's updated it in March, but mid-February we had people drop it from $28 to 21. That was Truist. Citizens reiterated a buy at $30. JP Morgan reiterated a buy at 31. And then Needham said a strong buy, but they lowered it from 36 to 33.
You know what?
The shadow government is she getting after us? My phone's in the other room, so I can't see what they say.
Is this a repeat of Rocket Lab? No, it would not be a repeat of Rocket Lab since we own a lot of this.
Oh, well, you own a lot of Rocket Lab, Steve.
So banks are do so. I have on Seeking Alpha. I can do the EB. So not EBITDA, but EBT, because they don't have depreciation amortization on here for some reason. And if we just go off of that, and I'll just do SoFi and JP Morgan, these multiples are freaking crazy. EBT, JPM. JPM is such a powerhouse. $72 billion of earnings before taxes.
Not enough, Steve.
What a great company. Great freaking company. So look at this. So SoFi in the trailing 12 only did 526 million of earnings before taxes, whereas JP Morgan did 72.2 billion. I mean, they're trading at 43 times their earnings before taxes, whereas JP Morgan trades at under 11. I would say if you're strictly going to look at this as a bank, SoFi's getting a really good multiple.
Yep.
I'm willing to bet if I go down the line and fill this in for everybody, they're going to have the highest multiple on it.
I appreciate you doing that.
I mean, I'm not saying it's not a great company. I'm just saying that at this point, I don't believe SoFi should be valued against American Express. Sure, they're both consumer finance, but SoFi's not playing the credit card game. Yes, American Express has a checking and savings account, but does anybody even consider American Express a bank? No. They're considered a credit card company.
Do you look at Nubank at all, Steve?
I don't, but I can put them in here if you want.
Yeah, I'm kind of curious because a lot of people, there's a smaller community for Nubank, but there's a rising. And for people that don't know about Nubank, Nubank is more so South America focused. But
that's why, because I don't follow. I'm not an international.
What do you mean you don't know about pesos, Steve?
No, I'm not an international stock person. I don't care about them. That's why I never got into Grab, because I don't care about that stuff.
I get it. No, but I was once in Nubank. I was also once in SoFi, and I am with you, Steve. I forget what price I sold SoFi, but I think it was in the 20s, and I don't regret it. I mean, do I wish that, it's always one of those things that's in the peripheral. I don't swing trade a lot, but for the companies that are in the periphery that I don't want to hold so much of, as soon as they, see a decent target, I'm going to be selling it. I mean, it's just where I'm at. Hopefully my eye doesn't start freaking out again, but let me see what I sold. SoFi at last year.
So I mean, Matt, if you look at this, Nubank is trading at such a lower multiple than SoFi on earnings and on earnings before taxes. Now, on tangible book, it's getting a huge bid. They don't have a lot of tangible book value. They're trading at 17.4 times earnings before taxes.
I didn't get on SoFi, Steve. I give that give kudos to our boy Tavis on that. 17.4. Wow. Okay. Wow.
Compared to SoFi, 43 times.
And it's growing pretty quickly. Hold on, let me pull up on my handy dandy notebook.
I don't know. SoFi is. I probably should have gotten out of it. I didn't. I think it'll get back there at some point. My preference is that they really start going after business banking and huge clients and wealth management. They need to diversify from loans. They need to.
Wow. I mean, it's night and day if you compare Nubank's performance. Not night and day. The performance is slightly better at Nubank, but the price, as you're showing, But Nubank is also a big fucking company, like you're saying, it's 67 billion. But it also has, what is that, Steve? 6, 7 times the, yeah,
Yeah.
7 times
It's getting
the.
a good on tangible book, but on their profitability, it's trading at a much less multiple. That's why I'm saying SoFi is being compensated for their growth. And I look, I have a problem with SoFi. I have a problem with Palantir. I have a problem with every company that reports adjusted EBITDA. Adjusted numbers are bullshit. Adjusted free cash flow is bullshit. Just report the straight free cash flow and straight EBITDA. You do not need to report that. It's shady. And I'll say that to anybody. I'll say it to Noto. I don't care. I mean, the reality is that there is no reason to report on an adjusted EBITDA or adjusted free cash flow number. I would say that to Palantir's executives too. When I do my analysis on Palantir, I always do straight free cash flow. I
Steve, what's
mean,
going on in the chat, bro? I'm sorry to cut you off.
why?
We
What's
were
going
talking about like Asian women decorating your bedrooms with Hello Kitty. Like, I don't know what's going on.
What do you mean?
I don't know. I don't know what's going on, Steve.
I have no idea. Is your eye like making you see?
My eyes making me see shit, I guess. Yeah, I don't know. I guess.
Yeah, I'm not seeing that anywhere, Matt.
Brian, Texas 409. I don't know. You date an Asian girl, you'll be eating rice 7 times a day. She'll make you buy a Civic with a huge spoiler. She'll decorate your room with Hello Kitty.
Okay.
Then it gets serious, and she moves in with her mom, and mom comes with her.
Okay.
I don't know what's going on in chat, Steve, and maybe it's my eye. I don't know,
but look, adjusted numbers. Not many banks report adjusted numbers, so I've always disliked that.
People saying I don't follow the chat. I'm following the chat. Say something worth saying, and then I'll bring it up.
Oh, it's probably because I was saying I wasn't interested in international markets.
Oh, okay, maybe.
Probably why.
I don't know. So, got it. So you're selling close to at the money calls with SoFi?
No, I'm not doing anything on it. I mean, does that potential be between 25 and 30 this year? Yes. Is that more potential than other things? Probably, because I'm less inclined that Nvidia is going to move now.
So let me ask. It seems like you over time you've gotten more bearish on SoFi, and I'm not trying to. Sorry, this thing keeps
I have.
moving. And
I'm probably the most bearish out of all of us on SoFi that holds it.
But why? Why do you continue to get more and more bearish on it? Because it's just not growing as you would expect, or
because one, they're not delivering business banking. Two, the tech platform's not performing. And I know that we got to give Noto until this quarter because he said Q1 they're going to make big announcements. So when they report in April, we should get a couple of deals from the RFPs for the banking platform. If we do, that to me, that's a game changer. But they need to do that. Look, the reason why I'm still in it is because they deliver across the board every quarter.
yeah,
They have the growth, they're scaling earnings, they continue to deliver. The problem is the perception of it. And the perception of the market is that it is just a bank. The perception is that it is a financial institution, not a technology company. And that's not me saying that. The market is telling you by how they're valuing it.
I hear you. It's not dirt cheap. I mean, I sold it at 18. When did I sell it at 18? January 2025. So I locked in. I mean, I missed the run to 30, but I don't know. Did I buy some? I think I ended up buying more or something in Robinhood. Let me see. After that, but I mean, I'm with you, Steve. But let me ask. So if it goes up to $30 again, are you gonna trim this time? I mean, or are you gonna?
I mean,
fall in the same trap.
If it runs to 30, that's roughly a 70-80% gain from here. I would consider exiting the position at this point. Because the problem is, do you think SoFi is going to become a top 10 financial institution or not? If they are, then you hold it. My mind is not made up yet. And when I look at their market cap, like, all right, well, let's look at it like this. If we were going to go by market caps, Matt, do we think that SoFi, which is down here, do we think it's going to become as big as USB?
No, it's growing pretty quick, Steve.
But can they become as big as USB is the question. Because if they can, USB is an 80 billion market cap. I don't know. USB does $30 billion in interest income. They do $16.5 billion in net interest income. They do $26 billion in revenue. Not saying SoFi can't get there, but how long does it take for them to get there?
And I guess, yeah, to compare, SoFi's at about a $4 billion run rate revenue at the moment.
Yeah. You know, you look at what SoFi is projecting for this year, they're projecting that their adjusted net revenue is 4.7 billion and their net income 825 million. USB net income is 7.6 billion. So once again, how long and can they get as big as USB? Maybe they can. I'm not saying they can't. I'm just saying that right now they're being priced appropriately for their growth. Like there's no reason that SoFi should be an $80 billion company right now. And then the other question becomes, when the great wealth transfer happens, are people going to go to SoFi or Hood? And I got to tell you, Hood's looking a lot more interesting at this point than SoFi.
Yeah, I bought Leaps on Hood for $50 for Jan 2028. I had 45s in which I had sold, what was it? I think 125 or 130 calls. And so I had a net positive on that. And I said, you know what? When it dipped back down to the 50s, I was like, or maybe it didn't dip to the 50, maybe it dipped to the 70s. I forget. But I was like, I'm not going to lose this chance. And I think by the time you get to the second half of 27, crypto is going to get bullish again. And plus they have the prediction markets piece now. So
yeah, I'm looking at this as when people inherit estates, when people inherit money, are they staying with their legacy institutions or are they going to go somewhere else? And if they go somewhere else, what's the chances they go with SoFi over Hood?
I mean, I've thought about moving all my money to Hood. What the hell? Do I have a leak on this can? I've thought about going to Hood based off the margin, 5%. Fidelity still wants to give me like 9 or 8 or 9 or 10% for my margin.
I'll tell you what, I've thought about moving money over to Hood because of the 2% match.
Yeah, I remember you telling me that. Maybe I
mean,
should.
2% to do nothing and just park money there that you would have just had in retirement accounts anyway.
Yeah, I should do that with my traditional because I don't even do anything with my traditional.
I mean,
my traditional is the SPY. So
you can get $2,000 on every 100 grand to do nothing.
There's no reason why I shouldn't move my Roth either.
Oh, very funny and correct. When people inherit money, it all goes to the New York City government. You are correct. It all goes to the New York City government.
Well, it all goes to Mom Donna. Interesting. So, say it goes to $30 tomorrow. You're selling. What are you buying? that money?
Amazon. It's the clearest play, and I know it's not something revolutionary. It's the clearest play in the market right now for the next 3 to 5 years.
It's never been cheaper.
It's never been cheaper.
But let me ask another question. Would you diversify some of that into Microsoft? Because Microsoft has also gotten cheap.
I think Microsoft is an incredible buy right now.
And I've never had more cash than I've ever had than right now, Steve. And it's not because I've been selling stuff or anything like that. It's just happenstance. It's this time of the year. I end up with a little bit of surplus because of bonuses, etc. But WWMD, what would Matt do? Or what should WSMD? What should Matt do?
I don't hate Microsoft or Amazon right here, Matt. There's no reason Microsoft can't go back to 550, 600. There's no reason it can't. It's around 400. There's no reason Amazon can't continue to get bigger. It is going to be the largest beneficiary from AI. And the market is freaking out about a bad year of free cash flow. Yet, in order to generate negative 500 million, they have to grow cash from operations by 60 billion this year. So, without taking all investments carry risk. Not all risk is the same. And I think Amazon and Microsoft provide less risk than putting it in other places. As I said last night to Tanner, and I'm not sure if you had left for Rocket Lab Weekly or not, when a company is on AWS, when a company is on Azure, it is not easy for those businesses to leave those cloud services. It's not an overnight thing, and most companies are staying. It is a nightmare to change that stuff.
Yeah, we're 6 weeks out from 395, Steve. Like, I get it. When it was trading at above 600, I think it was at 600, right?
It was about, it was around 550, 600.
Let me see. 3 year.
Microsoft is so inexpensive.
It got to 520s. Okay. So when it was in the 520s, I was like, this is a little expensive, right?
Right.
And it's dropped literally 20%. So it was at $3.6 billion market cap. The earnings hadn't caught up yet. I mean, we're talking about literally 9 months ago, right? So think about how much growth we've had coupled with a 20% decline in price, right? So that really helps it out. Yeah, I mean, my little tool here says it should within the next year go back to 485. Easy.
Can you build something for me? And not now, but build this for me, where you can select whatever companies you want and it builds you this table. Please build this for me so I don't have to keep updating it.
I've started something, Steve. If you don't mind me showing it, it's not the best. So
we'll show it in 1 minute, then we'll link your site. But think about what you were saying. So I just updated oracles. Let me just rearrange them real quick.
Actually, that's a good point. For this peer comparison, you should be able to select which one. But.
So look at Amazon. Under 18 times forward, under 30 times this year's. Amazon's never been cheaper on a forward basis. Never. And Microsoft's cheaper. They're the same multiple. The difference is Amazon's got 54% earnings growth, whereas Microsoft has 34% earnings growth over the next 2 years. But they've never been cheaper.
I guarantee you're going to see what I just brought up, and you're going to be like, why don't I own more? Why don't I own more?
What did you bring up?
Well, I'm just going to let you digest it. So it doesn't have perfectly.
I can't. It's too small. I can't read it.
Well, put us in the corner or something. You can blow it up on the screen.
Can you get rid of that side stuff to make this bigger?
I mean, technically, yeah. Eventually, it.
All right, that's good. So You want NVIDIA is what you want me to look at? You guys scroll down a little bit so I can see the numbers that our faces are blocking.
So needy.
Thank you.
But no,
Revenue.
we're looking at Microsoft, right? You can see the big Microsoft on the top.
Oh, I thought you want me to look at NVIDIA. Why don't I own more of it?
Well, that is what I was thinking. All the green, and
Yeah.
yes, but your eyes would immediately. But I think one suggestion that I had looking at is like this is automatically chooses competitors, but you should be able to like add tickers in that.
Right.
So that
Microsoft under 3 trillion market cap makes no sense at all. At all.
Because it's making. Let me think. It's making this last quarter. It made what 38 billion in net. It was like insane what it made in net income. I'm trying to remember what it was, Steve. Bring up your table.
Well, I want to bring up my other sheet where I have
That NVIDIA is insane though. The
100%.
Ford PE of fucking 17. And at the moment, it doesn't look like it's slowing down. That it'd be different if it looked like things were slowing down, but at the moment, it looks like everybody's still in growth mode, and I don't know if that's fully flowed through, right? Because we know Amazon's probably going to get around $200 billion in capex for the year, etc.
I mean, you look at them compared to Apple, there's no reason. I mean, let's just look at this. Apple is still a 740 billion market cap larger, yet they do 131 billion more revenue, and Microsoft does more gross profit, more EBITDA, more operating income, more cash from operations, and more net income. Like, how is it that Microsoft is a smaller company than Apple? How?
It's the free cash flow stuff, man.
Which is bullshit, because we've seen time and time again capex. I mean, and this is
the
why
market shook. The market shook. I get it.
the market is being so dumb. If we go back to just very simple numbers, there's a direct correlation. Microsoft and Apple. Okay. Apple has done 9% capex growth over the past 5 years. Microsoft 302%. Microsoft is now spending 83 billion on capex, whereas Apple is spending 12.1 billion. Yet you look at their cash from operations growth. Apple has grown their cash from operations by 30%, Microsoft by 109%. Apple was doing 104 billion in cash from operations. They're doing 135 billion now. Microsoft was doing 76. They're now doing 160 billion. They generate more from cash from operations, and it's all because they are balls to the wall investing in themselves through capex. There's a direct correlation when you invest in yourself with capex and how much more of a growth rate you get on the cash your business is producing. Apple doesn't have that. I just don't think that that's a good reason for Apple to get a bigger multiple than Microsoft, when the only reason Microsoft's free cash flow is less than Apple's is because they're choosing to invest in themselves. They're more profitable on every other line in addition to net income on the bottom line. Like, this whole market doesn't make sense. Too much of this market is sentiment driven, not reality with numbers driven. There is not a single reason Apple should be a bigger company than Microsoft.
Oh, no. I mean, I've had that complaint for quite some time.
Not a single reason. I mean, Microsoft to me is one of the best buys. And I agree with you. Is anybody going to think that it's crazy if Microsoft gets back to 500? No, it's already been there.
Well, I appreciate you giving me some. I need to write a backlog of. Actually, yeah. While I'm thinking about it, I'll write the backlog of items that I want to put in here.
Yeah, you gotta make those tables. I mean, that would be freaking amazing.
being able to select. So you gave me the idea. So if it brings up what it believes is the competitors,
Correct.
right? But like if I brought up SoFi, it shows Palantir. It's like that's not a competitor. So it might be technology, but I think what I'm thinking about now is in that particular table, you have the optionality of selecting who you want as a competitor, so you can add tickers as to who, and it'll save to your account if that's what you want, like, because if you're looking at that stock regularly, and then you could also, like you're showing, you could show percentages like I had, or you could potentially show the full on numbers if you want. Because I know you like looking at the numbers, maybe not necessarily the percentages. So
yeah, I think it's all good data. I mean, I have the margins in there too. I just wasn't showing it.
No, no, just that it gives me some thoughts. So I mean, you gonna sell SoFi and buy Amazon or what?
Huh?
You gonna sell SoFi and buy more Amazon or what?
Not at this point, but if SoFi runs and Amazon doesn't, I would highly consider moving the entire investment into it. Look, and I'll probably change my mind again. When they come out and announce earnings, I'm sure they're going to have great earnings. I'm going to get bullish again. I just, something about it in between earnings calls, I just get this way with SoFi because they're just not, their messaging is just not good. Compared to Hood, their messaging is not good. Am I crazy with saying that? In the chat, I want to know, I'm just going to, let me go to YouTube, put a poll up.
Are you just upset that Noto hasn't come on breaking basis points? No, I'm just joking.
Not at all.
When are you guys getting Trump on basis points?
I don't know.
I mean, Jake Paul was able to pull it.
Jake Paul's going to run for office.
I think so. Jesus.
Yeah. Who has better messaging about their products? Oh, I should probably go not type that in the chat and start a poll like I said I was going to do.
What are you doing, Steve? People saying JP Morgan's boring. What bank is exciting?
All right. We got a poll out. Please answer it. Who has better messaging about their products, Hood or SoFi? All right. 93% Hood so far. Keep voting. Please vote. Please vote. We need to see this. I need to know if I'm absolutely insane or not. Well, that's a different story. I am insane, but not because of this. Let's get to 100 votes, everyone. Come on. Please vote. Thank you. We got over 50 votes right now and 91% Hood. I mean,
what did I do? Open panel. Okay. I closed your chat by accident.
all right. Last push on votes. We're almost at 100. Please pick a side. Who has better messaging about their products?
Oh, I'm happy the market's down. I'm losing it. What? What am I losing it about? I don't know. People, I try to follow people's like commentary, but it's very difficult. Like, food for thought. I can only read snippets at a time. So if you're writing across multiple messages, it's very difficult for me to group them together. So if you want like a coherent, it's better to almost, I don't want to say write a paragraph. And I'm not saying super chats, right? I don't, but I'm just trying to say it's very difficult for me to be like capturing who's saying what over multiple chats. So if you want to ask a question, please provide some context with the question, because sometimes it's like Matt's losing it. It's like, well, what is it? Right? Like, I don't know what you're talking about. And yes, I am losing it. But
ending the poll. 100 votes on the dot. 91% Hood has better messaging about their products. I mean, that's not even close. And I think that's a big problem for SoFi. And I want to address this. And I'm assuming this is me. You were more bullish than Tanner and them, and now Total Bear is saying $10 is coming. Did I ever say $10 is coming, Matt? Or did I say I would buy at 12?
I think you said buy at 12, yeah.
Said I would buy at 12, and it's because I have a large position in it. Never once did I say $10 is coming. I said, Matt asked if I was buying here, and I said no, because I don't think it's good value for me because I have a large position in it, and I would be buying at 12. Never said that that is going to happen. Big difference. Thank you, Austin. Yes, buy 12 is what I would do, but I have a big position.
Hello from Korea. Hello. Thank you for being here. I don't know.
Yeah, but me saying that I would buy at 12 is not me saying it's going to 12.
But you also have a very large position already.
I have a large position. I don't need to buy more. Like, for me, buying here and driving my average price up is not worth it to me. I don't know. This is just one of those annoying freaking companies.
I appreciate people acknowledging, yes, I am winning here, and I am winning the...
You are. You absolutely are.
The large portfolio challenge.
You absolutely are.
I appreciate you guys acknowledging that. Steve doesn't like to think about that.
What are you talking about?
What are you talking about? Steve, I just want, I don't know why. I was just like, you know what? I wish I was in New York right now, Steve, and I could get a nice chicken parm.
Oh, chicken parm sounds so good right now.
You could watch me smoke a cigar.
I just had some pasta.
Did you? What kind?
I just had pasta.
I know, but what kind? Pasta do you?
Don't worry about it. Don't worry about it. Don't worry about it.
Don't you worry about it. Oh, God.
I don't know, Matt. SoFi is very much annoying, man.
Well, I mean, it's always been one of those companies where I've been confused, and that's why it's always been in my peripheral. Like, I can see the floor price going up, but to me, I could see a place where it could potentially triple, quadruple over time. Will it eventually be worth $100 billion? I believe eventually, yes. I think it's growing too fast, but I don't know. It's just, like you stated very eloquently, it's overvalued for what it is.
I'm not saying it's overvalued. I'm saying it's getting a multiple for the industry that the market perceives it's playing in.
To me, I perceive that. I didn't say you said it's overvalued, but
if you want to say it's overvalued, you can go right ahead. I am going to say that it is getting a multiple for being considered a financial institution compared to actual financial institutions.
Overvalued. Yeah, you're probably right to push back on that. It's not overvalued per se. Like Palantir, overvalued for the metrics, right? I can understand the premium to an extent, but overvalued still. But I would never stop buying it because I know eventually it's going to be a $2 trillion company. SoFi is one of those ones where I've always known it's going to go above 100 billion in terms of market cap. It's at what, 22 billion right now, something like that. Check my little.
I mean, going over 100 billion would be quite a big accomplishment. I mean, you're talking about bigger than Bank of Montreal, Bank of Nova Scotia, bigger than PNC. bigger than USB, bigger than Truist. I mean, I'm not saying it can't happen, but a lot of things have to happen for that to happen.
The thing that bothers me most is like ops margin, right? Ops margin for SoFi is 18%. If you compare it to Hood's is 46%.
Oh, I know.
So like, and I get it. Hood's gross margin 92%, which is pretty insane on its
Incredible.
own.
Yep.
SoFi is 83, still great,
Yep.
but it's like, what are you doing to get your ops margin to go? Like, is it that expensive to run your company?
Well, you know what the problem is? That's not how financial institutions are valued. It's not valued on ops. So that's why it's not being factored in.
Well, no, I'm just saying like the ops margin for Hood is 46. Like that's insane.
Yeah, I
And then
get it.
you look at SoFi, it's 18. Like, what are
You
you
know what?
doing that your ops margin is 1/3 the value of Hood?
I'm going to build a new sheet right now, Hood, SoFi, and IBKR. And we're going to do it live. Because IBKR has some crazy fucking numbers behind them.
It does actually.
It's insane. I always get shocked whenever I look at it. So
And they pay a dividend too.
they're such a good company. Like they're legitimately such a good freaking company. It's incredible. See, Matt, you need to automate this for me, please.
We can do it after the stream.
Because I'm not OCD, but I like everything looking the same way. All right, now that bullshit's done, we'll start with Hood. Or Matt, if you want to read me the numbers, it'll probably go quicker.
For IBKR? Yeah, let me do that.
No, just go start with Hood. Give me the revenue. I have it. Give me the gross profit.
For Hood?
Yeah.
Fundamentals. Let me go to Hood. Do I have it in here? No, I just have margin percentages and stuff like that. I need to update it to get like dollar amounts. Sorry, I'm a failure, Steve.
Failure. You have the EBT?
Go to Yahoo for you. I'll go to Yahoo for you, Steve, to make it easy.
You don't have to. You got, make a note. This is another stuff you need.
I know. You're not wrong.
Make a note. I'm just going to give you these tables so you can just automate them. How about that?
Sure. But then you better use it on your streams.
You know what? If you build it, they will come. Net income.
I will say this thing is pretty sweet. These tools are pretty sweet. I keep getting rejected by AdSense though, so I need to figure out why I'm getting rejected. Probably because I don't have the tables that you need, Steve.
Well, tables would be good. God, Hood's got such good freaking margins. It's incredible. Oh, we can put free cash flow in too. There we go. I mean, how solid is that for Hood?
Crazy.
All right, so we got to keep it here. All right, SoFi. Good old SoFi. Their operating income and earnings is the same. It's incredible. Incredible. SoFi's cash from operations is negative. How was that even fucking possible? We're just not going to put that in.
Yeah, it is strange to me.
All right, IBKR.
Steve, people taking off over there?
I have the window open.
Ah, that's right.
Dude, wait till you see this. That's not a typo either. Their free cash flow is incredible.
There's no way.
That's got to be a mistake, unless I fucking put the wrong revenue in. No, I didn't. How is that possible? That their cash from operations is bigger than their revenue? That's got to be a mistake on freaking Seeking Alpha or now. All right, so this is why financial institutions, you shouldn't go by that. Here, let me bring this up real quick so I can show you what I'm looking at. So if you look at their change in accounts receivable and then change in accounts payable, that's creating a huge differential for the cash from operations. And I think that's why no bank reports free cash flow.
Yeah.
Most likely.
Well, that's why they do ROE, return on equity, and stuff like that.
So let's not use cash from operations.
Because they're receiving a lot. So people are putting money into it. They're not pulling money out.
Yeah.
Somebody's saying SHW or Schwab beats all these. We'll see. I'm trying to make the table.
What's Schwab's ticker?
SCHW.
Let's see. Schwab is a great freaking company.
Yeah, I wanted to buy someone. It got really cheap. I think it was after the financial, like the 2023 or maybe it was 2024 small bank crisis.
Yeah.
I just never got around to it.
EBIT. Another one that has the same exact number. I thought I was losing my mind. I mean, Hood's numbers are incredible. Hood's price to earnings before taxes, 42% margin. It's the highest in the group. Price to operating income, okay, IBKR is incredible because they do 4.77 billion off of their revenue. So they're 76.9. But I mean, you look at Schwab and you look at Hood and then you look at SoFi, you know?
Not wrong, Steve.
We're going to get rid of this. We're not going to we're going to get rid of that.
Some are asking for Steve to take these broken wings.
I mean, when you see this, does this make you bullish SoFi? And I get it. This is what they've reported in the trailing 12, not forward. But I don't know. You look at Hood's margins, they're just incredible.
You got Boss Lady Rachel in the chat.
Dookie Pie, we're not getting into enough trouble. How about that? We are not getting into enough trouble. I guess I'm trying to piss Tanner off right now with talking bad about SoFi. Not talking bad, but I guess I'm no longer as bullish as I once was.
To be fair, is Tanner as bullish as he once was?
I don't know. I don't think so. Maybe he is. I got to tell you, I'm more and more interested in Hood. I really am. Especially after the chat, basically 91% said Hood is doing a better job at messaging on their products. I think Hood wins market share over time against SoFi at this point. I'm going to have to do another analysis on Hood. Maybe I start a position soon.
I thought, yeah, I guess you never had.
I haven't yet. I really should. I think it's becoming a great company. Even if I'm still on the wait list for a gold card, even if.
I don't understand it.
I mean, I am on the wait list.
I don't understand it. Ooh, Steve. I think we're here. We're getting closer. What was it? Schwab, IBKR. Somebody wanted me to do shift 4. This is interesting. We'll get rid of coin. Upstart. Palantir. SMCI. What? We wanted.
Congratulations, Jarrett. You got off the wait list. I'm still on it. I think Maddie is busy coding something because I gave him an idea.
Let's get in there, Steve, if you want to pull it up.
No, somebody said that you don't even say hi anymore.
You're right. Is it for Dookie Pie?
It is.
I know. I'm on the wrong thing. Never mind. It's still building it, and it just turned it off. But it'll be interesting when it's done. You can tell me what exactly you want me to build, and I can build it. It's not a problem.
So are layoffs bullish for Meta? Look, we don't want anybody losing their jobs, but layoffs are a reality of corporate America, and layoffs reduce SG&A costs over the long term. Now, there could be a 1 quarter spike depending on what the payouts are, if they pay out additional money, et cetera, et cetera. But long term, it should expand margins. June, I actually may have opened up a chat with support yesterday and asked them to take me off the wait list. Even sent them a picture of Vlad and myself saying that Vlad said he was going to get me off the wait list. I'm still on the damn wait list. So,
Steve, you're a good man.
No bueno.
Somebody asked earlier, sorry, because Rachel just brought up LNG, and I was too busy. I was reading the chat, and I forgot because I was inputting something into Replit. But VG, would I trim here, add to next decade? I've done that in the past because I think next, in my opinion, is a long term. I think the risk to reward right now for next is phenomenal. There is still hair on it though, so there, I'm talking about risk to reward, right? Just keep in mind, I'm saying risk to reward, not just reward. The reward, obviously, if you look at them, are going to be massively skewed. But of course, next decade doesn't produce any revenue at the moment, so you have to take these sorts of things into consideration, and so it really just depends. So some people like Steve don't like to invest in pre-revenue companies most of the time. And so, it's no hit on Steve, right? It's just Steve's risk tolerance. And I think that that's something you need to all think about. So when I'm talking about a specific stock, like next decade, and that's not your bag, just shut your ears off, don't just because Matt's buying it. And I've had several people that have told me they've sold, and I think that's okay. Like I've had many people that have made lots of money on Rocket Lab and many other companies. People like time horizon that you do on a particular stock. They're more concerned about the next 6 months or year or whatever, and that's okay. I just don't play that game. So if that's your game, I don't really follow that generally. I like to look for companies that I think in the next 10 years are going to be a larger staple within the economy. So that's why I hold things like a Rocket Lab, an Amazon, a Google, Venture Global next decade, Symbotic, Dutch Bros. People are still going to go out and get their coffee unless they invent a pill that tastes like coffee and gives you that sensation of waking up and drinking coffee. I just think that people will continue to go get coffee. So yeah, I mean, that's just how I organize my portfolio.
Well, Matt.
When are you trimming your VG, Steve?
Trimming?
Or selling it?
Who's selling it? You're selling VG?
No, I'm not.
So why would I sell if you're not selling?
Because you're your own person.
Listen, I'm following you. When you give me the green light to sell, I'll sell.
Well, more likely to be. I mean, if the whole thing in the Middle East comes to a close, I think it's likely to go down before it goes back up.
I haven't been on the subway in a very long time, Doogie. And I am sure there are GLP-1 advertisements everywhere. I don't know, Matt. I'm not looking to get out of VG. I actually think Next is looking very interesting. When are they supposed to be revenue positive? 29?
Revenue positive? No, they're going to start churning out cargoes in the first half of 27.
Okay. I mean, look, next decade, it's $6 a share. Maybe something that Stevie takes a little bite out of.
Yeah, I mean, to give people some context, it $1.5 billion market cap, I think, right now. Let me just double check. I don't want to talk out of cadence. Yeah, $1.5 billion market cap right now, and basically, I think it's being hit because of a lot of shareholders selling out because of project financing. But what ended up happening was I think that the bankers are looking at it from a project perspective and not a share perspective. So when you look at it from a project perspective, you're like, oh my God, they're taking on more debt. Well, yes, but they didn't dilute the shareholder. So for me, I'm ecstatic because I was expecting to get diluted by 50% and I'm not. So when I was previously talking about for trains 4 and 5, I was like, oh, I might get diluted by 50%, so take whatever market cap gains you'll say. I was eventually thinking it was going to be $20-25 billion market cap for the company. It's like, but then acknowledge the fact that you're going to get diluted by 50% to 100%. So,
Matt, your sound is so fucked up.
13x, you're on.
Is that sound coming in and out for everybody else?
It just came in and out for you as well. I can hear you now. You guys hear me?
Yeah, your sound is coming in and out, Matt.
Oh, that was weird. Oh, well, hopefully I'm back. Can you hear me now?
I can hear you now.
Okay, that's weird. So yeah, going from 1.5 billion to 20 billion, people were probably sitting there like, oh, that's going to be a 12, 13x. Well, it's like, well, if you're diluted by 50%, then you're immediately decreasing the amount of return. Oh, am I back? I'm hearing it trickle again. It's getting like, am I back?
I mean, you're coming in and out.
Yeah, I don't know what's going on. I'll just stop.
Lay down the hammer? What am I laying down the hammer on? Matt, say something.
Hey, bro.
All right, you're good. Keep going.
No, I don't know. I keep hearing like because you have a steady ambient like noise in your background, and I can hear it going in and out. So I think it's me.
I think that's you.
It's me.
There is nothing going on in my background.
You mean you don't hear the typical noise of New York City in the background?
Well, I hear a plane going over. Could not hear what you just said. You moved your lips, no sound came through.
His name's Steven.
Well, we can hear you singing now. Oh boy.
I don't know what's going on with my headset.
Yeah, we need to get you a new setup, Matt. New setup. So
spending all that money on Replit, not on my headset.
I mean, it may make your Replit adventure be even better. Tell Amit to stop support. Oh God. Any new news? At the moment, I don't think there's any new news. I don't think we're going to get anything until tomorrow. The more important thing is what happens with the Fed. So I'll go to Reuters. Let's see if there's anything new. The only thing that is new is that Trump is threatening further strikes on Carrig Island, and he's pressuring allies to secure the Strait of Hormuz.
Do I have the same mic as Amit? I don't think so.
What happened, Matt?
Somebody asked if I had the same mic as Amit. But yes, somebody asked as well, do I think that the fear of dilution is less? Yes. I mean, the dilution event would have happened when they basically went to go finance trains 4 and 5. So, I think they have a really good slide that maybe I'll post on my X that basically shows that before you actually get trains 4 and 5 fully commissioned, they'll have generated over $2 billion worth of ops cash, which will help dilute the not dilute, but will help offset some of the debt that are needed to build some of those things.
Let's not even think about China taking Taiwan, because if that happens, oh my God, forget it. Talk about the global economies going down in flames.
Long story short, with next decade, if you guys are interested, and like I said, check my numbers on this piece, but when trains 1 through 3 come on, it's really not going to be that prolific because they only own 20% of the entity of trains 1 through 3. And so I think they're only going to cash flow about 200 million net to next decade. The project itself will be much higher, be closer to 1.1 billion, I believe. But because next decade only owns 20.8% of the first 3 trains, which they were carried on, by the way. So it's just like basically them building some operating costs associated with them building, but not them having to build capex for the steel, etc. Trains 4 and 5 are different. They own more of that. And so they had to come up with their internal financing. So they're not carried on trains 4 and 5, but they own a larger percentage. That's where the real money starts to come through. So you'll end up having closer to $500 million a year when those come online. And then once they hit long-term investment thresholds, if they hit them, it'll go to about 0.8 billion, so 800 million a year. So you're talking about 800 million a year in ops cash or distributable cash being generated, and the company's only worth 1.5. So you know the price, yes, it's forward out in time, but then there's an additional 5 slots of trains that can be added, and that at the moment is where next decade owns 100% at the moment. Maybe they do give up some of the equity to get it built faster, but if you think about it, if they're then generating $800 million a year, and those trains are only going to cost them, say, 5-6 billion, they can pretty much self-finance at that point and start generating massive amounts of capital. And it could be ending up being one of the largest facilities in the world. And they don't own 100% of it, but they'll own a large percentage of it. And if that's the case, then an upside scenario, I could see next decade being worth over $40 billion. So potential for whatever you buy into, if you think about it, then say it's a 2 to 3% dividend yield on $30-40 billion, then you're talking about what you're purchasing today being potentially a quarter, if not half, being returned to you in yield on costs. So you're buying it for 1.5 billion. They're paying out 900 million in, let's just say, annual dividends. You're going to be getting over 50%. But that's, it's an upside scenario, right? So, but I'm cautiously optimistic. I don't see a reason why I wouldn't be able to do
that. How do you feel about exporting if the political landscape shifts, Matt? Like, that is always a fear of mine when looking at these companies that are pre-revenue. And a lot of next decade has to do with permitting that is going into the next presidential cycle, is it not?
Yes. The thing that I think is going to be easier, though, it's not greenfield at this point because they're about to be fully constructed. So for Venture Global, I can see where you're coming from because CP3 is yet to be fully greenfield and permitted. But for next decade, it would be adding additional trains. So I think the permitting will be much easier than if it was a greenfield new development, right? Because you're adding more pipes, you're adding more trains, etc. But you are adding footprint, but you're not going out of the normal footprint of the original area, if that makes sense. So it's like me drilling another oil well. Much more difficult to get an entire facility sanctioned, but easier for me to drill a new well. So it's like the regulatory is still there and you still have to get things permitted, but the permitting, I believe, is going to be much easier to drill a new well or expand in the case of Next Decade or Venture Global than it is for a new facility. But I think it's also going to be dumb. Like, I think like an easy thing for let's just say if the political environment shifts, meaning the Democrats, which some are for LNG, but some are against, and they want to side with Greenpeace and stuff like that. But the majority of Republicans are for energy exporting and energy independence, but there are some Republicans against it. So I'm just going to say, as a majority, the left somewhat pushes back against increasing LNG and everything like that. The easy rebuttal for the Republicans to say during some sort of debate around this would be, so you don't want our European allies to have cheap energy, and you'd rather them buy it from Russia, or you'd rather them buy it from the Middle East or somebody else, or we can continue to help our European friends. Because primarily before the United States started exporting to Europe, it was predominantly Russian gas, and so there was pipelined or provided through LNG, liquefied natural gas. So that's really the only way that they'd be able to, and or that it's our largest export. So you want to choke our largest export. So yes, that a physical export, of course. Our largest export is actually services as Americans, but yes, for a physical export, it would be LNG.
You still think that next decade can get close to the size of Cheniere from an exporting aspect?
It's different, right? Because Cheniere owns the majority of their facilities versus next decade, while it has a large percentage ownership in something that could be as large as what Sabine Pass will eventually be, they don't own 100% of it. So I think that's why you can't compare apples to apples. It's like, oh, look at the Rio Grande LNG facility. It's going to potentially be up to 60 MTPA of export capacity, but next decade only owns 20% of the first 3 trains. The others are owned by Middle Eastern investment companies, Saudi Aramco, and Total, which is a French multinational international oil company. So yes, I think you need to be. This is part of the reason why it's difficult to invest in individual stocks, is because so many people like to jump to assumptions like, oh, their facility is going to be as big as X, Y, and Z. And it's like, well, yes and no. And that's why you kind of need to do your due diligence, because you can easily make the wrong assumptions if you don't know what you're looking at.
Interesting, Matt. Very interesting. So, who has more exporting capability, VG or Next?
Right now?
No, in the future when it's all contracted out.
VG will have massive amounts more. By a large amount. VG will be at its most, I think Cheniere wants to get up to 100 MTPA at most. VG will be exporting over 150 MTPA, so it'll be at least 50% larger than Cheniere. And then I forget what number I get to with next decade running through, and if everything's assumed to be 100% from trains 6 through 10. But I think it'll be maybe a quarter at most of Venture Global for next decade's export capacity. Equity owned, of course.
Interesting, Matt. Very interesting. So where are we putting money to work this week? So I know you're sitting on a little bit of capital there. Are you planning to wait to see how things shake out overseas, or are you looking to deploy now?
What's Matt looking at for the next 3 weeks? Probably got.
No, I'm asking if you're looking at, what are you looking at this week? You looking to deploy capital, or are you going to wait?
No, I mean somebody's. I don't know if he's asking for a price target. So I don't know, Steve. I'm at a crossroads. I mean, the lay of the land is the following. I mean, I kind of have a few rental properties at this point. I have my personal house where I'm recording this from. Have a decent stock portfolio at this point. And so this is the most cash I've ever had sitting, and it's just because I've gotten bonuses, writing covered calls, cash secure puts, etc. So I'm just kind of curious, like what's the next step for me? I'm at a crossroads because I'm like, I don't know if you wanted like a philosophical, like what's Matt
No,
potentially going to do with
wherever
this,
you
or
want
if
to say.
you just want to be focused on equities. But yeah, I'm sitting here like, do I buy a nicer house here in Houston? Because I live in a nice house, but at the same time, it's like it's not. I don't have much land or anything like that. It's just a townhouse, 3-bed, 2.5 bath. It's not anything crazy. So I have my sister and her family coming, and I'm like, well, I don't have enough beds for people to sleep in. Um, she's like, oh, just have them sleep on the couch. It's like that's kind of embarrassing, like having people sleep on the couch. But so I'll get them cots or something like that. But so I'm sitting here like, what do I do? Like, do I just start spending more money? Do I have more fun?
No, you live alone. You don't need to buy a gigantic house.
Well, that's also part of it, right?
Like if you were having kids, that's one thing. You live alone. Put that money in the market, sir. Or go buy more rentals.
Yeah, but that's the thing. Where do I buy rentals? Do I buy them in
I don't know.
Houston? Do I buy them in New Jersey? Do I eventually buy one that I would potentially move into if I were to move back to the Philadelphia, New Jersey area? Amit says I need to buy or rent a midtown
You do not
apartment.
need no, do not move to New York. I'll tell you that right now.
So
I mean, listen, if you're going to move back to the Northeast, you can get a really nice place with an acre plus in PA for not a crazy amount of money. I mean, there's some places in PA I was looking at. I'm like, this makes a lot of sense.
yeah, but then I'm just calling it.
What?
Then I'm just sitting like if it's in PA, depending on where it is, it's not going to rent for anything.
No, but I said if you're going to move,
Yeah, but
you're not
how,
moving to New York. That'd be crazy.
I don't know how long it's going to be. Like, is it going to be?
I mean, look, you have look, I am not a real estate person. I know jack shit about real estate, so take what I say with a grain of salt. Not a landlord. I don't want to be a landlord, but why not just buy more? If you want more rentals, buy them where your current rentals are. That way, they're all in the same area.
Trying to be like Houston.
Is
No,
it?
I
Oh,
mean
you're trying to
that's
be like
part of
me,
it.
then you would sell the rentals.
Yeah, no, it's
Guys, there's no reason for Matt to move to Westchester. Why? So he can pay a ridiculous amount of taxes? He's already in a low tax state. Why move? Why go from Texas to New York? That makes no sense. Unless you're moving to New York for work, zero reason to come to New York.
yeah.
Zero.
Maybe we move to Miami, Steve.
I mean, no property tax, no income tax. I mean, I should say no state tax. I mean, if you were going to move to Miami, I think that would be fucking awesome.
I did really enjoy being in Miami for that couple days. It was fun. It's more walkable than Houston. At least Brickell. Brickell was very walkable. A lot going on.
I mean, listen, I was on Realtor the other day looking at properties in Brickell. I'm like, Jesus Christ. Like what you
Houston.
get for your money down there is very attractive.
Oh, comparatively to New York City, yeah.
I just think it's attractive. Freaking Dookie Pipe. What is this? Freaking what was that movie with Kevin James and freaking Adam Sandler? Chuck and
Yeah, I now pronounce you Chuck and Larry.
yeah, Chuck and Larry. Hilarious.
It is. It's hysterical. I think about that from time to time. It was a good movie.
And yes, I am married.
Yeah, Steve won't marry me. I've asked him many times. for the taxes.
For the taxes.
No, I do have a day job. For anybody that's curious, I work a 9 to 5, and that's part of the reasons why I'm not just going to pick up and leave. Hot Steve is married, man. He's off the market, so you girls and ladies get eyeing him up. Back off.
Married to Amit. Eh.
I don't know, Steve.
I don't know, man.
What about you this week? You sitting on your hands? You thinking about just waiting for the market to kind of flesh out with respect to everything going on?
I'm thinking about buying some more Zeta. I'm thinking about Amazon. I mean, it's just there's nothing outside of what I'm looking at. Nothing new. I did a deep dive on SMR today. It's got a lot of merit. I'm not ready to pull the trigger yet. You know, it's the only licensed company in the space. The only one. But no, there's not a lot of stuff I'm really looking at other than the Mag 7. If I did not have the position I have in NVIDIA, I would buy more. But I have a large position in NVIDIA for me, so I'm not looking to buy more.
What do we want to do? Hood, IKBR, Schwab, and then 4. We're getting closer, Steve.
You getting closer to building it out?
Yeah, if you want to share this tab.
Looks good.
But I still need to have a toggle. I asked it to do price versus return. So this is actually kind of cool too, though, because you can compare price, but versus return. Hood's obviously over the past year done a little bit better, but
guys, for the record, I'm no longer in now. I've said that many times. I sold at like 122 and a half, 123 after the big spike.
And this is part of the reason why I tell people, because like you can't catch every episode. You can't catch Steve all the time. You're working your day job. So it's like when you're like, oh, well, I'm just going to sell when Steve sells out. I have people that'll reach out to me like 7 months later and be like, Matt, are you still in this? I haven't watched any episodes. It's like, well, you bought it because I bought it at the low, or like, you know what I mean? So it's like that. It goes back to, if you're trying to rely on somebody, it's like you have to, you're borrowing their conviction, you're borrowing their mindset, and you can't necessarily just be like, oh, I'll just wait until they sell it, because they could have sold it. You know what I mean? So unless you're really following it to a T, and you know they said they're going to get out at $30 or whatever, you can't just immediately follow people into stuff. And so I just really caution people like that.
Please do not make any decisions based on me. I was in now because I liked the premise. When it shot up 8% in a day, I exited because I was like, it's going to fall. I normally don't do that. I only held now for like 3 weeks or so. Normally I don't do that. But when it shoots up a lot like that, I'm going to take my profit and lock it in.
Yeah. But yeah, Steve, I think if you just want to give me, no, it looks like PEG ratio isn't working. But yeah, if you want to give me all the different items, what I was thinking is now I have the ability to add tickers. So you can add like a completely obscure ticker if you wanted to. But what I also would like to do is be able to choose what your columns are, kind of like what you have. That would be kind of cool. So then you can kind of customize it for whatever you want it to be.
I'm going to send you a copy of the sheet so you can see it and build it out.
Worth it.
Yeah,
worth it. And then hopefully it'll save you some time.
I mean, that would be nice. That would definitely be nice.
And the thing that's nice, Steve, is like I whether it works, I don't know. We have to test it, but if you add it to your account, it'll save locally to be like, oh, Steve wants to compare SoFi, and it'll be like he wants to compare against these things. And anybody else that looks up SoFi, it'll have whatever it want, like whatever the AI thinks is the comparables, but it'll save yours to your account. So you know that it'll be Hood, IKBR, Schwab 4, because that's what you want. So that's the hope, is that it locks in and stores it locally.
I'm with that.
Yeah, like if you wanted to add Palantir, for example, you could, but you could just get it out of there if you want.
So Matt, are you streaming at all this week? What are you doing?
Well, you guys got me enticed that Amit's going to be out because he's going to be he's actually should be doing the future show because he's.
Well, he's going to do a future show tonight. I'm going to be doing the market close on Tuesday and Wednesday. I'm sorry, Tuesday, Thursday, maybe Wednesday. I got to see what my schedule looks like. I'm definitely going to do the market close Tuesday and Thursday.
You said market close.
Market close, yeah.
Not the open.
Amit thinks he's going to do the open. Yet to be determined.
Okay.
But he thinks he's going to do the open.
Well, if you want somebody to help, I can't guarantee that I'll be home on those days. I have to check my schedule, but I'll likely be in the office tomorrow. So I know I have a meeting that I need to attend to.
Yeah. I will definitely be streaming during the week. And then the regular nightly schedule, but I'll be filling in for him for some of the closes.
And so they call him Hot Steve.
Maybe Matt will have some of this built out and we can relook at it during the week and automate a lot of different things.
That's the hope, is it just saves people time. And I want to make it free. AdSense is being a pain. It is free right now, so I'm losing money on this. But my hope is that AdSense will eventually, enough people will use it and create articles. So like there's an article section. So if there's enough unique articles, my hope is that AdSense like, oh, this is a unique site, and yeah. So it's in my description and my YouTube. If people are interested, feel free to add it. It's completely free, like I said. So yeah, it'll be fun.
So before we go, I want to get your opinion on something. I am thinking about following up with another post on X. So my post has gone pretty viral, 611,000 views since Friday, about the wonderful New York State taxes. So I wrote a new one.
Oh, you haven't posted it yet?
I have not posted. I'm gonna read it now and see what everybody thinks.
I'm ready, Steve.
I may have to tone it back a little bit, actually. I may have to tone it back. So I'm still editing it. Here we go. My post last week about the estate tax proposal got 600,000 plus views. So clearly this has struck a nerve. A lot of people asked me to back up what I said about what happens when states push tax policy past the breaking point. Fair enough. Let's talk about what the data actually shows, because it's worse than what most people realize. According to the IRS migration data, New York has lost $111 billion in a net adjusted gross income over the last decade from residents moving to other states. That's not hypothetical. That's $111 billion in taxable income that used to fund schools, subways, police, and infrastructure that is now funding those things in Florida and Texas instead. California lost $102 billion over the same period. Florida gained $196 billion. Texas gained $54 billion. That's not a coincidence. That's a pattern, and it's accelerating. Between 2018 and 2024, 561 companies relocated their headquarters across the country. The San Francisco Bay Area lost 156 corporate headquarters. Los Angeles lost 106. New York City lost 27. Meanwhile, Dallas alone gained 100. Austin gained 81. Nashville gained 35. These aren't just logos on buildings. Each of those headquarters represents hundreds or thousands of jobs, a local tax base, vendor relationships, charitable giving, and economic activity that ripples through every deli, dry cleaner, and daycare in the surrounding neighborhood. You want names? Tesla went from Palo Alto to Austin. Chevron went from San Ramon to Houston. Oracle left California for Texas. Charles Schwab left San Francisco for Westlake, Texas. SpaceX left Heathrow, California for Texas. In-N-Out Burger just moved to Tennessee. Even Elon Musk's Boring Company and Neuralink left. When In-N-Out, a company that was born in California and has been there since 1948, decided it can no longer raise a family and run a business there, that tells you everything you need to know about the environment these policies create. Now, look at what happened to California's budget. In 2022, the state had a $97.5 billion surplus. Today, California is staring at a structural annual deficit projected to be between 15 and 25 billion for the foreseeable future. Their own Department of Finance admitted that revenue projections over 4 years fell short by 165 billion. California's personal income tax makes up nearly 70% of its general fund revenue. When the high earners who pay disproportionate share of that tax start leaving, the math breaks fast. The Tax Foundation now ranks California 49th out of 50 in business tax climate. The message the state sends is clear, and businesses are responding accordingly. That is exactly the road New York is being asked to go down right now. New York already lost 884,000 residents to other states since 2020. Almost 1,700 millionaires changed their addresses out of New York in 2024 alone. Millionaires paid 44.6% of all personal income tax collected in the state last year. And the proposed response to this fragile state is to drop the estate tax threshold from 7.1 million to 750,000, raise the top rate to 50%, and add a new 2% income tax surcharge on millionaires, increase corporate taxes, and add a capital gains surcharge. That's not a revenue strategy. That's an eviction notice to every high earner and business owner still left. The Dallas mayor just publicly predicted an avalanche of New York City financial firms heading to Texas under these policies. Florida realtors are reportedly seeing a surge in inquiries from wealthy New Yorkers. Other cities, Miami, Austin, Nashville, are building entire ecosystems designed specifically to attract people and businesses New York is pushing out. Schools, cultural centers, financial service clusters, they want our talent, our capital, and our tax base. And they're making it very easy to leave. Here's the part nobody in Albany wants to hear. The people who leave don't just take their tax returns. They take their boards, their fundraising networks, their philanthropy, their job creation, and their spending. A city that once attracted the world's most ambitious people risks becoming a place they leave once they made it. That's not a Republican talking point, and it's not a Democratic talking point. It's an economic reality that the IRS data, census data, and corporate relocation data have been screaming at us for years. I said it in my first post, and I'll say it again. When you tax people to the point where they feel targeted, they leave. When they leave, the burden falls on everyone else who can't. California is proof New York doesn't have to follow. But right now, every single proposal on the table points in the exact same direction. So is that polarizing? Like, should I post that?
I don't think it's polarizing at all. I think you hit on a lot of really good points, and I think it'll be interesting to do case studies 5 years down the road of how much economic value has been stripped of California and some of these other Western states that are trying to impose, as well as New York, I guess, in this particular matter. By being overly greedy, and people then leaving and taking their businesses. Yeah, I think it's going to be an interesting case study.
So I'm putting a poll up if I should post it or not. I'm like I said, I'm still editing. I may tone it down a little bit because I am truly not trying to make this political, because this is not political at all. And I got a lot of comments that I pushed back on, that I responded to. This is not political for me. This is the reality of my home state pushing more people out. Now, I can tell you this. I personally know a lot of people that do very well. One of the most well-off people that I personally know that I am friends with left New York several years ago because of their tax policies, and they will never come back. I'm not going to get into too much detail about it, but let's just say that this person is extremely wealthy, and the city was a better place with him here. The amount of he must have taken people out for business four nights a week for dinners. Like, he spent a lot of money in the local economy that he is now spending in another state. It is insane that we are letting people like that leave. It is insane.
People like that are like cruise ships, right? I mean, I always think about it like Billions with Bobby Axelrod. It's like, think about how many people are helping support, get data for that individual, clean their homes, do work for them. They themselves are economic beings. They themselves are businesses. And not only that, but they can take, like, Palantir leaving the Valley. Think about how many billions of dollars are now leaving on an annual basis that could have been generated in terms of revenue. And instead, you're trying to be short-sighted. I am much more for taxing businesses than I am for taxing individuals. If you're going to tax at all, I mean, I still think that the business taxes are still way too high. But to me, it's like, tax that, then really trying to do capital gains taxes, etc. Because look at how much value Elon has generated by being able to sell PayPal, and then being able to invest PayPal into SpaceX and Tesla and many other ventures. Think about the trillions of dollars he's been able to generate, people. And then what is the government going? Damn headset, man. Hopefully you can still hear me. Yes, anyway, so that's just kind of some food for thought. I think that you're trying to tax up front and get pennies on the dollar. And that's why I think one of the best things that you can do is invest in real estate as a normal person, because you're able to then offset those taxes and grow that nest egg if you do 1031 exchanges and things like that. It's I don't know if you lost me, Steve.
No, we were listening, Matt. You there, Matt? Hello?
Now I'm back, yeah.
Okay. So I actually got annoyed one night and rewrote the tax code. I have it somewhere in my email. I did a couple of years ago. I would need to update it. I mean, look, there are two things that I would really like to see done. One, and I know that this is not a popular thing, but I would say it anyway. Why not at least consider and run the numbers on a straight flat tax? And the reason I say that is because when you think about the amount of exemptions, the amount of tax breaks that are given, tax 20% across the board, no loopholes on income. You do that, you make it where there's no more of these loopholes for billionaires, and just do a straight 20% tax on income, you'll see revenue increase. Or get rid of income tax and do a 25% flat tax on all goods and services purchased, period.
I'd rather that personally.
I mean, you want to go buy a car that's 100 grand? All right, now it's 125. You're going out to dinner and it's $500. Now it's 25. I'm sorry, 600. You're going to buy something for $10, it's now $12.50. You do consumption tax on everything purchased instead of income tax, you'll capture everybody that's skeeting the line because there are no loopholes on consumption. And when you look at GDP, you can backdoor your way into what you need to generate in revenue. I mean, I don't know that really hurts anybody. And look, the flat tax idea comes from we all use the same roads, same fire department, same police department, same roads. We all get one vote for elected officials. So if we all are looked at equally like that, why don't we all pay the same tax rate? Making no deductions. So
No, I mean, I
fine
get
with
frustrated. I get frustrated with that as well because, like, I'm one person. I don't use the roads more than anybody else that's going to work. Like, why am I having to pay a larger percentage of that because I make more? It just doesn't make sense. I worked hard to get where I'm at.
Well, here's
Delaying
my
gratification and in investing and trying to make myself better in terms of financial value, and I'm being taxed more because of it.
when you really think about it, if you did a 20% flat tax, no deductions, like you give to charity, not deducted, like no deductions. That means somebody making 100 grand on a 20% flat tax will pay $20,000 in taxes. You get somebody making $1 million, they're paying 200 grand. You get somebody that makes 10 million, they're paying $2 million. I promise you, these people that are making 10 million plus, they're not paying an effective rate of 20%. They're figuring out ways to skate the line. And you do a corporate flat tax also, no deductions. You will balance the budget.
You wouldn't have ability for, if you're investing in capital expenditure projects, etc., to be depreciated.
No deductions on income. Now, I'm not saying that we should do that. I'm saying that is an alternative to the tax system that we have right now. Because the tax system that we have right now is not good. The tax system that we have right now is very restrictive and prohibited in many areas. And we see the ramifications of that. We see Texas and Florida gaining a lot of businesses and businesses moving out of states that they were built in because of that. And I think that that's unfair. I think that we should have the same tax rates across the board. There's a way to do it.
You're a good man.
No. Sometimes I try, sometimes I don't. We'll see. We will see. Anyway, we've been live for just about 2 hours. I think we're going to call it unless there's anything you want to talk about, Matt.
Nothing. Just would really appreciate you showing me what particular fundamentals you want me to compare against peers, and I'll be happy to build that for you, and
Yeah,
I'll let you know when it is.
I'm sending you a sheet right now.
I completely anticipate making this free if I can get AdSense and actually get money. The advertiser that I'm using right now is paying me like 3 cents a day. It's not enough. The RPMs are just not there. Like, RPM should be in the dollars, and I'm getting cents. So I need AdSense to work. If AdSense doesn't work, then I'm eventually going to have to unfortunately charge. But for now, everything's completely free.
And that's because Matt is a man of the people.
I try.
A man of the people. Matt, I'm sending you a sheet with 2 tabs on it. Matty Money. Oh, I need to name this Matt Sheet. Oh boy. Well, it's going to be an interesting week, everybody. And I am going to put something on X soon, probably tonight around 7 or 8. It's not going to be right now. I want to do it a little bit later when people are home. So please check out Matt's website. Thank you very much. And Matt, you have an email with a new spreadsheet.
Thank you. I appreciate that. I'll build that right now. It's fun. I like this stuff. I told Steve. Steve made fun of me because he called me earlier. He's like, "What time did you go to bed?" And I was like, "I don't want to say."
Hold on. The reason I asked you what time you went to bed, you sounded like you were dead.
I'm doing it for the people, Steve.
So go on. I just want to make sure that everybody understands that when he said hello, he sounded like he was dead.
Oh, I was hoping I sounded not dead. So, but yeah, I went to bed quite late. It was this morning. It was not last night.
Tell everybody what time you went to bed.
That's not important, Steve. What's important is I'm working hard for the people, and hopefully
What's
it works
important is Maddie said to me around 10 a.m. that he's going to take a little nap. And I said to him, "You're taking a nap from just getting out of bed." And let's just say that Matt probably got 3 hours of sleep last night.
I'm working for the people, Steve. Money doesn't sleep.
Oh, Wall Street 2.
Wall Street 3.
When's it coming?
When I get this monetized by AdSense.
There you go.
Yeah, I need to get better about my sleep schedule. I've been trying to get Tanner's advice because
you need to hang out with Tanner. Listen, Tanner acts like a 60-year-old at 20-something.
I love it.
It's crazy talk.
Love it.
Crazy talk.
All right, well, you go get some delicious dinner with the boss, and I'm gonna look at these beautiful charts you just sent me and make it usable. And hopefully by this evening you'll have a great spreadsheet that you can use from now on.
I am going to rewrite my tweet. I am going to send it out. And if anybody wants to look at the original one that went viral, it's here. We're at 611,000 views on this.
Not enough.
Not enough. Not enough.
How many words, Steve?
I think it was just under. I cut it down to just under 1,000.
This new one or the old one?
No, the other one. The other one I wrote it started out like 3,500 words, and I kept paring it down. So a lot of these people, I get annoyed. Like there's one comment, I swear to God. So this one person, right? They wrote, let me show this and then we'll go. This guy, Matt Lech, not reading all that, tax the rich, is what he says. Okay? So this was my response. Well, I should show you that he, when you click on him, co-host at Left Reckoning and Lit Hangover, etc., etc. And when you go to Left Reckoning, it says
I don't know
a podcast by Matt Lech and David Grishcombe, formerly of the Michael Brooks Show. We work to cover and build a stronger, popular, working class rooted, and no BS socialist left. Okay. So I responded in kind. And this is what I responded with. That is a wonderful response. You are the co-host of a podcast that says, quote, we work to cover and build a strong, popular, working class rooted, no BS socialist left. Yet you are unwilling to read roughly 1,000 words that outlines how New Yorkers will be impacted by the proposed tax policy. You say tax the rich, but this isn't policy aimed at the rich. This type of tax policy over time will cause many to flee the state, businesses to close, and opportunities for New Yorkers to vanish. How is that good for anyone in New York trying to build a life for themselves and their families? I mean, I don't get it. I don't get it at all. Matt, what happened? What'd you do?
This headset is driving me insane. I don't know what's going on.
When are you gonna just get another freaking setup, Matt?
I think today I might go get a new laptop.
I love it. I love it. So
I don't know if it's the USB ports or what.
So please, if you could take a look at it, let me know what you thought about the post. I'm going to write another one. Really appreciate everybody being here. Dookie, what are you going to sleep? It's 5:15. It's 5:15. What do you?
Dookie lives in a different part of the world than us, Stephen.
I don't think so.
No,
that's not what my information says, sir. Not what my information says. But anyway, appreciate everybody being here. Nappy nap. I hear that. Nappy nap. I figured, Doogie, with you being a basketball fan, you were going to get ready for Selection Sunday. I'm ready for ESPN tonight. I'm going to be glued to the TV. I think St. John's is going to be a 4 seed. I'm excited. Tournament, baby. I'm ready. This is the best time of the year for sports. NCAA, March Madness. I am still thinking about trying to figure out a way to do a pool with everybody in the community. Dookie, for being a basketball fan, Selection Sunday is when we see the teams that get in that are on the bubble. We see the seeding for the tournament. Patino Mafia, that's right. That's right. Look, I think St. John's can go to the Sweet 16 this year. We'll see. I'm excited. So if I can figure out a way to run a pool with everybody, I'm going to be looking on ESPN. I'm going to be looking at a few different things. And I'm thinking about running one and putting up a prize for it. It'll be free for everybody that's interested. And do me a favor, just make one bracket and we'll have some fun. We will have some fun. Let me hear you.
That's you. Trouble now.
All right. So no, it's not going to be a cash prize. It'll be something cool. I don't know what it's going to be yet, but I will come up with a prize and we'll go from there. And yeah, that's about it. If you respond to my posts on X, I will try to respond. And please go follow Matt. Please use his site, probably.xyz. He's going to be making some updates to it. I think the site's coming really well.
I appreciate it.
We'll go from there.
I paid Steve for all this.
You did not pay me for anything, Matt.
You're right. I should, though.
Really quick, how many of you have an X account? Because I would like to follow everybody that's following me.
On X?
Yes. I mean, I'm already following you. How many people have X accounts? If you're in the community and you have an X account, shoot me a message on X and I will follow you back once I see it.
You're man of the people.
Listen, I try to be a man of the people.
Steve is a man of the people.
All right. Well, appreciate it. Free dairy delivery, June. I like that. I will not be bringing dairy with me on the plane to CA, but
why not?
I mean, not doing that.
But you should, though.
I mean, it would be nice, but I can't do that. Why
True.
am I being told X account is for old people? That's not very nice.
Yeah, X is for old people. You can use the same sort of thing on Probably. You haven't seen that feature yet, though, Steve.
You know what, Matt? I can't believe it. All right. We will see everyone later. Thank you very much for being here. Truly appreciate it. Selection Sunday. Make sure you're in front of a TV. I believe 7 p.m. is when it starts. See everyone later.
Godspeed.